The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here, and just got back in, had an appointment downtown, just made it in time. And thank you, Steve Rhodes, for a great lead-in. And, of course, today being Thursday, I'll be followed by Larry Pesavento, and that'll be the Commodities Hour. And we just got full programs all the way through. And so let's get to the nitty-gritties. Yeah, the Dow is down 27 at 12,542. The S&P is down, no, the S&P's unch at 1355. The comp index is down 9 at 2837. You've got gold down 15 at 1714. Still don't like gold, I must say. Maybe I'm wrong. And we've got silver down 34 cents at 32.53. Platinum's down sharply, minus 15 at 1570. Copper's tried to rally. It's at 3.46, up 120. We'll look at that a little later on. Crude oil is down. It's at 86.06. Bonds are only up 3 ticks at 152.04. I say only because although they've done very well, yesterday was very interesting. You would have expected yesterday with a very negative session that money would have flowed into bonds. You would also have expected that the volatility, where am I here? Oh, I haven't got it on. That the volatility index would have spiked. Let me just get that. That's the Dow. Let me find it. There it is. So I'm just going to the page that I show subscribers every day, and that's the quintiles. That is the 5 little sectors that I show. Now look at this. Here's the 120-minute chart. The Dow is down 30. It's in leg C to the downside in the 120-minute chart. The implication is that it can bounce and then have another leg down to D. But the volatility index, look at this. When the volatility index was at 19.65 back on the 23rd of October, the Dow was hanging out in the 13,280 to 13,084 area to 13,334. Well, when it plunged down to 1605 on the 2nd of November, the Dow was up at the Dow was up at 13,288. So what we're looking at here is the volatility index, and this is the reason why I always say it's imperative that you learn to use many tools. You're gardening. You don't need a garden hose right then, but you might need the rake. Well, you need the rake. It needs to be in your toolbox. You might need a little a scooper just to put the sand from one area to the other. These are very important things. I use various tools. I use dozens of tools, and you've got to learn how to use the right one at the right time. And I'm going to show you a bunch of things this morning. Now look at this. So the volatility index is 18. It should be at 20.90 to 21.30 at this particular point. Is it telling me, because if you're looking at these charts, and once again I have to set up my, let's see, first of all we get it to silent because we don't want to be having another voice going on at the same time. Then we go to browser, and then we go to Google, and then I just press .com wowzer, and there it is. So when we're looking at the charts, you've got to say to yourself, wait a minute, there's this rather large U formation, yeah, not euphemasia, but U formation in the daily Dow. 12,521 was the last peak of trough of significance back on the 24th of July. Made a full arch formation. 13,653 was the high. It comes down. Where does it come down to? To today's low so far of 12,524. So it is within a very small distance of. It's at a very small distance of that 12,521 area. Now listen to this. The S&P made a low on the 24th of July at 1329.24. It's made a beautiful arch formation. This is just a very, what I call a naked chart, a very clean chart. I don't want to do anything fancy there. There are no moving averages, nothing, just arch and straight lines. And I teach those when I teach my courses. And what's happened, the S&P today has gone down to 1352.68. So it is 1329, 1352. So it's quite a bit above the 1329 low of the 24th of July. Look at this. The Trin Index is at 0.65. Something's wrong with this picture. It is just ignoring the fact that there's been a 1,000-point decline, over a 1,000-point decline in the Dow, 100-point or so decline in the S&P. 120, in fact, in the S&P. So now what's going on is that the volatility index is ignoring this. It says to me that either we are building an incredible amount of energy for an incredible spike to the upside, or wait a minute. The volatility index is just telling us, be careful, because why? Because it's saying that over a period of time, it could be going into the 20s, maybe the 28, 32 area that I've been talking about for quite a while, and then you will see another phase of the market to the downside. So I'm just going step by step, and I'll explain what I mean by step by step. When I go to my, this is what I sent today, 18 charts I sent to my subscribers. Normally I wouldn't do that. But, you know, I'm not in the medium that I want to be right now, because I want to be in the medium where I can show subscribers very carefully how I'm going through the daily chart and the weekly chart and the monthly chart of each stock that we're looking at. I don't have time. Nobody has time to look at it. I don't even know if anyone will have time to look at the 18 charts. But in case they were either long, the one long stock that we have, and that's still doing, let me just see, I don't want to say anything off. Yep, it's still making new recovery highs, 52-week highs. Or the shorts, let me explain what I want to do. This is a Dow daily chart that I show subscribers every day. Not only do I put a lot of notation into it on the chart, but underneath it, I still write the text to say exactly what to look for that particular day and what levels to be looking for. That's yesterday, right? At the close yesterday, it goes out this morning. I also look at, am I going to be able to do this? Let me just squeeze this a little close there, a little close. There we go. And then I show all the different, this is one of the charts that we're looking at. We're short this particular stock, and it's still going down. Let's see, it's still down quite a bit from where we shorted it. And I explain what we're looking at, the huge gap. The ChapmanWave goes to peak A, B, C, D, E, goes to an F at 36.24. I show the weekly chart, if I can get that. Am I going to be able to do that? Yeah. And then I show, look at this, how many charts there are. I show the weekly charts. I show, here's another one. There's a stock that we're long, and I show where the resistance is, what was the recent high. This is an incredible amount of work, and I love doing it. I give the overview. I explain exactly what we're looking at. Ugly is as ugly does. Not sure what that means, but it came to me and feels appropriate at this time. But it is the VIX index that, and now the ChapmanWave Trin gauge, that have me quite worried. Are they telling us that they have not yet noticed the market's decline and still have to really wake up? What's up with the 18.05 high and the 1.41 high in the Trin as the day's highs yesterday? So then I show the arch formation. I discuss it, and I say, what do we look for today? What exactly would be very important? Being options expiration, could we have a 10 minutes past 3 sudden spike to the upside after being down earlier in the day? Those are the things that I talk about. There's another chart that let me move to this one. Here's a chart that we've been short. This is a chart that made an all-time high just 3 weeks ago. It's been in a 3-year incredible move to the upside. See how it's broken that uptrend? You see all the peak A, B, C, D, E, peak A, B, C, D, E, pulls back, makes an F. That's the cup formation, that what I call the drop bucket, where the backhoe picks up all the dirt and then drops it. That's exactly what happens here. Price goes from the July, August, must be September high, and pulls back all the way to 55 round number low. I look at round numbers. I teach those things. And then it starts a brand new move above this red line. I've turned it into a red line now, the 9-period exponential moving average. And for the first time in a weekly chart, it goes underneath it. So I've got, as I say, 18 chart. I can just pick up any old chart, and you'll see. There we are. Look at this one. This is a chart that I have. We've got 4 stocks that are short, and they're all going towards their targets. Some have hit their targets and are going even lower than that. This particular one that I'm looking at right now, it's 87.61. It's gone even lower. It's gone down to this line that I call the ChapmanWave inside wedge support line. It's stocks very often just slide down that line. They just keep hitting it, bouncing up, and then coming back down to it until they hit the major focus, which will be the left side, right side price time action. Now, I mentioned this. Why? Why did I go through all this? Because I wanted to explain to you. I also wanted for my subscribers to see this is the kind of analysis that I do when I give my Master Trader series. My Master Trader series coming up. This is a Master Trader series on the ChapmanWave. And obviously, you're not going to become a master, even if though it's a 2-day webinar. You're going to become a person who knows how to evaluate, knows how to draw a trend line, knows how to do a cup or an arch formation. Someone who's able to add a bunch of techniques to their own technique to become even more circumspect when looking at charts and being able to say, I can decipher this. I can take a blank chart. Let's just do that right now. Let me take a chart of something that I've never looked at before. Give me a name. Give me a name. Give me a name. Just make it up. I'll just hit the keys. Let's go to D. D is Dominion Resources. Look. Just glancing at this particular chart, what do you see? Well, the first thing I see is immediately, I don't even have to think about it. I go to my plumb line, I go to the top, I go to the bottom, I turn, I do that, and then I can say, hey, wait a minute, that's incredible. Is there a left side, right side price time match to this? How do you get that? How do you draw the plumb line? Well, Dominion Resources, I'm going to do this now. This is the most basic thing. I haven't done a single thing in the ChapmanWave per se. Oops, that's green. All I do is this. There's my, oops, let me go to the exact number there, right there. And now I'm going to go right side, click, change the color. Look how easy this is. Look how much you can learn. And kaboom, there it is, left side, right side, price time match. Now, even more important than being able to just do that kind of thing, look at the inside wedge. Look, if I join those lines, I love to use gaps on the left side. I've been doing that for 20-something years, maybe even more. You take the gaps on the left side and you look at all the low bars and you join them. Well, where does it join to? It joins right there. That's the ChapmanWave inside wedge. Do I always choose that level? No, that's what we study. What candles can you use? What gaps? What's on the left side? Why would you do it? What does it mean? What are the technicals doing? I'll be back at 877-927-6648 and love to take your calls. This is a great day for taking calls. Dow's down 47, S&P's down 4.50, and Basil Chapman, Tiger Technicians out. We will be back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman had a little problem there. I hate when I have these kind of problems. So you're right. Just for the moment, you'll be looking at a white screen, but it won't be for long. Here we go. Let's see if I can get this up here. Open desktop. The right side, open. There it comes. Probably lost all the data. Oh, man. Anyway, let's just face facts. It happens. Life is made up of many, many different attributes. And some of them are negative and some of them are positive. And we're right. There it is. Good. Okay, so that was interesting, wasn't it? That's back there. That's back here. And what I'm looking at here, okay. Right, so I was talking about the Dow. Now let's go back to a couple of things here. I'm going to move this to that side there. I want to go back to the white chart just for a moment. You see, I was talking about this left side, right side price time match. These are the things that can really help you in your trading. Look at the way, as one of our dentists has just said, he's using the 9-period EMA as a resistance point on his short, and it's just been a fantastic, way of being able to gauge where the resistance will be, and it hasn't even got to that level yet, and it's still looking good. That's the way you want to use it, and this is the red line right there. That's the moving average, the 9-period exponential moving. You can use any one you want. Be consistent in what you use. That's very important. I always say that if you are using any indicators, don't form fit the indicator. Just be absolutely sure that that's your indicator. That's the reason why in the ChapmanWave methodology, I've developed, in fact, I'm working on a whole precis right now on what I've done in my last Master Trader Series Level 2. I'm rewriting the whole format. I'm using chart patterns and formations, and within it, what happens is the evolution of something is so important because maybe that's the reason why it came back down. Because when you are in a situation that you've used a particular technique, then as you use it more and more, like I've used this example before, if you're woodworking and using a chisel, and all of a sudden you say, you know what, I'm going to use the number 3 chisel, not the number 5, or golf, you use number 3 instead of a number 5. You might find that one, it took you ages to get to the point to be sophisticated enough to be able to say, I know when to use 3, now I'm going to use 5. And then you get used to 5, and then at a certain point you say, you know what, 5 and 3 are really good. I don't need any of those because I could chip it or whatever it is. And that's based on experience. And that's what you really want to do in a 2-day webinar. You want to be able to go from one thing, go over and over until you really nail it, you really feel you've got it. Then you can extrapolate from that information and put it into everything else. And what I love to say, because I'm an advocate of the ChapmanWave, is the ChapmanWave is the waveform that never sleeps. Look, every single peak in this particular example of D, which is Dominion Resources, I tell you, it's fascinating. I love to do this. I don't know if it's updated here or if I've lost it all, because I just, that's what happens now with my work on TradeStation. It's there. Something's happened. I don't know why. But I can go through A. I love the serendipity of doing this. B. A was Agilent. B is Barnes Group. They were all notated. I don't know. I just did this the other day. C. City, which made a peak. E top and a double top to boot. Look, there's your peak. E top and City at 38.72. Makes the cup formation. Goes to 38.50. So what has it done? It's gone just below. That's the upside down dreaded H. You see how all these different techniques are applicable? Saratoga Bob says, Basil, your 9 EMA has kept me short in the NQZ, that's the NASDAQ futures, in the daily chart from the 21st of September high. Entry at that level was based on a 1 to 1.272 expansion. Great. I love that. You see, you've got a methodology. At any point, if you get stopped out, fine. You knew exactly what you were doing. You knew how to trade it. That is what's so important about this. Now, look what's happened. So, City Core makes this double top. First of all, it makes this huge cup formation. And then it stalls at the previous high of 38.40. It can't get 38.40 on the 19th of March. Makes the cup formation, goes to 38.72. It takes it out by 32 cents, makes a double top. Those double tops are potent. They're weapons. And what happens is it pulls back below the cup halfway. It says it's going to test the bottom. If it breaks the bottom, you can get a 1-to-1 expansion to the downside. That's where we are. That expansion can even expand further. So I just thought I'd show you a couple of chart patterns so you know what. How on earth would you know what I'm talking about, what I'm doing in my opening call, my daily newsletter, if I can't show you? It's the only way I can do it. I'll be right back, and I'll take your calls, 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians Hour, and let me just show you a couple of things. It's just, I think it's important. In the ChapmanWave, if you take rough rice November, November's finished, right? So that's done. November should be, let's see what date it went to, the last date. The 14th. Oh, well, something traded, but it doesn't matter. Here's the November chart. If you go back, I'll skip the other one on the left, but if you just go back to the most important one on low on the left, on the daily chart, on the 5th of June, at 14.265, you count peak A, B, C, D. It goes to an E. It pulls back at 15.87. On the 11th of July, it comes back, goes back above the 9-period moving average, that red line, crosses the 200-period moving average, and goes to a peak D at 16.365. And now it's gone to a trough D, and it's making that cup formation, an extended cup formation to the downside, probably going to take out the low of 14.545 based on this particular chart. If you look at, I don't even know what these are because I wrote them down, lean hogs. Look at this. Lean hogs right now, so that's, let me get rid of that right there. So you've got a brand new buy mode. So there it is. You can just change this. You've got, I'm going to give you the chart in a second. This is the December. I don't even know if people trade that. Doesn't matter. I love these because it allows me to hone my craft. I love studying these charts because if you put the ChapmanWave to it, it doesn't matter what it is. If you've got a viable methodology, it goes to E. Now we've got to see whether this is going to be an A to a B or is that G. G/B. Let me explain what I did. In the lean hogs December, you've got a buy mode from the low bar of the doji, big candle doji. There's a big implication that I don't want to go into it right now. It's 70.60 on the 23rd of August. It goes peak A, B, C, D, pulls back sharply on the 25th of September from 75,875, pulls back, holds the 9-period moving average, then it starts this cup formation. I would have drawn this in. I didn't have a chance to do it. I would have drawn in the cup formation, first the small one, and then the bigger one, and I would have gone like that, and then I would have gone like that. I'm going to show you this chart because it's very important. What happens, it goes to, remember when I talk about the magnet of the 200-period exponential moving average? Well, it refused to cross and hold above it ever since back in April. It broke down, ever since it broke down in March. That became the barrier. Then all of a sudden it tried to go to it in peak E on the, that's October, I'm just doing this quickly, October the 19th is 79.80. And then it turns the 200 period into a support level. You know, this is the way you want to understand these charts. I teach about the MACD and the stochastic. I teach about the on-balance volume, that little blue line there. So this is going to be a very interesting thing. It's holding the 9-period exponential moving average. It says there's a good chance, especially with the candle that was the long-legged doji candle, that it's going to try for 81.3, for the 80.50 level. It's at 80.40 right now. That's going to be the test, because if it breaks above 81.35, it's going to leg C, and it's going to go even higher. Let's just grab another one. Let's go to the GCZ. The GCZ is the gold contract, which is trading down about, it's about 14 to 16 points. Look at this. Beautiful cup formation all the way from May of last year. That cup formation at 1678 finally breaks out, and it snaps through it in the pattern that is very important, because I call it ChapmanWave cup and ladle. When it goes through the left side higher, in this case 1678.60, and it does it decisively, just a real quick move through it, which it did on the 31st of August, that says, this can still go to a leg D or higher. So it goes peak A, B, C, D, it goes to an E, and then it makes the cup formation with an F and a G, and then that cup formation with the fading technical says, be careful, you're gonna decline. And what does it do? It goes all the way back to where? That 200-period exponential moving average. My eye says that there's a good chance that the gold contract is going to attempt to get into the low of the candle of the 7th of November. The low was 17.03. What was the low today? 17.04.50. So it's attempt to that. The next 3 or 4 days are going to be very important. Why? Because if gold breaks under 1700, really good chance it's going to test the 200-period moving average of 1677 again. That's going to be very critical. How it does that and what it does. So I just wanted to go through a couple of charts. I want to explain the methodology involved here and how it can benefit you. Do you want to use volume? Yep, look, they're the volume. They're those volume bars, right? They're the green and red ones. Do you want to use candlestick patterns? Oh, absolutely. I love those candlestick patterns. I just discussed one. There's a very important one right there on the 19th of September. So all of these are very important. The two doji candles on the 9th and the 12th, very important. So I love to be able to go through this in a very organized way. Let's look at the GLD, same thing, the GLD. Now it's even more important than all of this. Let's go to a chart that we've all looked at before, I'm sure, and we want to know what's going on. Apple. Well, Apple has just made today, it went to exactly the left side, right side price time match that I'd been notating for a while. And that says, from this point here, right here, it's going to be very important to see whether Apple is able to hold this area of the 528. I'm going to say the 528 to about 522 level. Why? Closing decisively below. First of all, remember I talk about price coming down. Yes, it can take out many, many weeks of work when it comes down in a crash formation, but normally you get an arch or a cup formation or a V or an inverted V. Look at this. From the doji low, that doji candle, beautiful doji candle, on the 25th of July at 570, the round number, it went to peak A, B, C, D, then a brand new ChapmanWave flat base restart, A, B, C, D, E, which says, this is the methodology of the flat base restart. Regardless of where you go to, if it's identified correctly, you will come back not only toward, not only to, but under the starting point. Well, 579 was the starting point. And where did it go to? It smashed through that on the 7th of November. And it's gone down to the left side, which is back on at 528.66 on the 18th of May. The midpoint I've chosen in this particular instance is, the midpoint is the 15th of August for a very specific reason. Where does it go to? It goes to yesterday, the 14th. Oh, I'm sorry, it's a day late. Oh, a day late out of what? Out of... so that's May, June, July, August, September, October. So let's just say that there are 4 weeks. So that's 20 out of 20 weeks. How many trading days? So it's about 180 or something trading days. It missed it by a day. These are the techniques you want to learn. You want to learn about a channel. What's the difference between a trend line and a channel? Well, a trend line is a single line that is using either the highs or the lows of any particular bars or candles that you want. That's the way I treat it. A channel line is where you've got two or more bars on the opposite side. In other words, if you're going down, you're looking at the highs to say, hey, that's now the resistance. I don't have that here yet, so let me make it right there. So that says that Apple, just using the trend line on the upside to make a channel, would have to break at any point. I don't know what day it is, but let's just say it's next week. It has to break about 577 to 578 to get out of that channel. Where's it trading in right now? 527. So that's going to be a 10% rally. So I don't need it now. I don't even want to have it. It's just it interferes with my eyes. So what's important is that in this particular chart, that the 550.97 area of the 9-period exponential moving average, that's the first thing that Apple needs to close above. It won't probably do it in one try. It'll do it in 2 to 3. So, okay. Now, a couple of questions. Let me just check in the den. We've got the dollar. Let's go to this. It'll be on the black chart. I want to look at the New York Stock Exchange. Why? Dollar NYA.X. The New York Stock Exchange, talking about channels, look at this. Goes up like that, breaks slightly above the channel, comes back into the channel, and then what does it do? It goes to the lower part of the channel. Let me just show you this. This is how you can learn to do this. This is called the ChapmanWave Inside Track, and I teach how to use this inside track. The reason why I changed colors over the years is that I found that when it grows above the resistance level, you've got to call that a green line, because if it can hold above that, that's now bullish. You've turned what was a resistance repellent zone into a propellant zone. So the red to green is the area of reversals. On the downside, when you're going on the up channel, the lower inside track, look at this, how beautifully you got the buy signal, and all of a sudden the buy signal seems like it's working, and then plop. On the 7th, it breaks under it and says, get out of any trade on the long side. This is very negative. You're going down, and it goes right through the 200-period exponential moving average. This is the New York Stock Exchange chart. So now what's happening is the weekly chart has got a peak D, and the monthly chart has still got that peak D, but it's still way below the October 10,387 high of 2007. So each new high it's working harder and harder. The stochastic in the monthly chart is at 80%. That's good. And the MACD is still good. So all I'm saying is that we've got to be careful that you don't get another cup formation, arch formation in the monthly chart of the NYA, because if that monthly chart starts to break, if the monthly chart goes under the candle of July, very small, tiny doji candle, it's just amazing that it could happen in a monthly chart of 2,000 stocks. So if the NYA breaks under 753, it doesn't even have to close under there. It just has to break under it. There's 300 points lower. It's at 7883 right now. That'll say to me, uh-oh, be very careful with your portfolios. Manage your money carefully, because the 200-period moving average of 65.25 will be in play. Now look at this. You see, you don't want to make assumptions without looking at both sides. There's this up channel, and the up channel inside track says, don't get excited. The monthly chart has to hold above 7,700. It's at 78.80 right now, only down 22. So that's the level that I'd be watching on a very short-term basis. And not only that, the 76.79 is the 200-period moving average support in the weekly chart. Now, there's another thing I spoke about. I've been speaking about it for quite a few days, for about a week, and I've been saying, in a bear market, all news is treated as bad news. In a bull market, any news is treated as good news. So you add, that's number one. Number two is a bear phase I consider a bear phase lower lows and lower highs. A bull phase, higher highs and higher lows. Just keep it simple. Got a question here. Email just came in right now, if you heard the plop plop, about HOV, stock that we did have, made a nice profit, never got in. I've got it in the weekly chart as leg C. It's trading at 434 right now. The daily has given me a sell signal to sell mode. I've been looking at it and I've been saying I want to buy it, depending on how it held. The first level I was looking at, I had no intention of buying it there, was could it hold 428? Oh, I haven't got this. Let me go to the white chart if you don't mind, because I know I've got a lot of work done on that. HOV, which is Hovnanian. Remember, Hovnanian is the stock that, there, 428 is what I said, maybe 432, somewhere around the 50-period exponential moving average is where I said, that's where I want to look at it. But I also said that if it starts to pull back and the MACD and stochastic pull back sharply, I'm going to be very careful about this stuff, and I'll explain why. Because there's big recognition over the last 6 weeks that the home builders are now back. Even politically, they were starting to talk about it. Says to me, uh-oh, you've got to be very, very careful, because the housing sector, Philadelphia Housing Sector Index, is about to not break down. On the daily chart, it is about to really take a hit. Weekly chart is still looking pretty darn good, and so is the monthly. But I have a leg D in the monthly chart of the housing sector index. So, well, let me do that. So Larry in the den said, Larry Pesavento said, that is worth reaping. He means repeating. But I'm not sure whether he's talking to the den or to me, and I can't remember what I said that is worth repeating. Whatever it is, it's worth repeating. I'll be back. Dow's down 60, S&P's down 6.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern. on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. Last segment we got... what happened to it? Let me just take a sip of this tea. There you are. Now, this is what I wanted to say. I like arbitrarily to do things sometimes. It's not like I don't have time. I mean, I make time. And if I'm in front of a computer, this is what I do all the time, constantly, checking out the charts. Why? It's practicing your arts. Like tennis, you practice that stroke until you get it right. Look, R, writer systems, is that alphabet that I like to do every once in a while. I go A, B, C, D, F, G, A, B, all the way through to Z and see which stocks are still around, that single letter stocks. Look at this. A rider starts with a doji low on the 12th of July at 32.76. It goes to a very quick peak D and then pulls back on the 30th. Then it makes an even quicker peak, ABCD, and it goes to another one on the 17th of August. The rule is the quicker you get to a D, the quicker you're going to have a consolidation. Not a smash, just a consolidation. Does that. Has a rogue wave, a right arm, I always raise my hand, a right arm extension to a doji high at 43.36. But what is it saying? It's saying, hey, you remember how I used to hate the 200 period moving average? That's that purple line. Now I love it. And it goes where? From the low of 38.35 on the 26th of September, it goes peak A, B, C, D, pulls back, repeats that cup formation to an E, makes a top at 47.99 above the 200 period EMA and says, okay, I've done it. Now I can have a bit of a rest. So now it's underneath that 200 period moving average. The MACD looks poor. The stochastic looks poor. The price is not actually as bad as you would anticipate with the stochastic and MACD like this. So I'm saying, hey, let's see how Ryder holds 42.81, the low of the doji low of the 22nd of October. If it breaks that, then the platform that's been built at the 4160s area, 4160-ish from back in early October, that's going to be the next support. And that's the way you do it. The trends has changed. It's in a downtrend, got a down arrow, but the weekly chart is still holding well. So I want to just explain, the concepts. It sounds so much, there's so much going on, but the simplicity of identifying the lowest low bar and then merely counting each successively higher peak, that is important. Now, let me talk about two things as we're about to wrap. And then, of course, I know it's a fantastic show coming up with Larry Pesavento. Great shows all afternoon. I'm going to do something right now. I'm just going to give you, I'll do it on the white chart background. And IYR is pulling back to me. That's also another big sign to watch. But at the same time, what I'm looking at here is that the Dow, let me pull this chart right across here. Oh, wrong chart. I'll just make it this one here because it's already done. All the work's done. 120 minutes. There it is. Okay. You see this chart here? I got no technicals at all. This is what my subscribers get every day. The left side, right side price time average, 12,398, comes in round about the 29th of November, between the 26th to the 29th. And that says that we could do it very quickly, but whatever happens when we get to this whole consolidation area between 12,000, the trough of 12,521 on the 24th of July, 12,492 on the 12th of July, and then 12,398 back on the 8th of June, that's going to be really important. Why? Because if you smash through that, you're going down to the 12,000 and what was it, 30 level that we hit back on somewhere around June the 1st or the 4th. So this is what I just wanted to say. Make it easy. That's the downside. Within this context, you see there's a price, left side, right side time price match. It says, hey, be careful because at any point, that 12,743 level that was broken, that could be retested just to say, hi, everybody, I'm sorry, I forgot to say goodbye, and then it could come down again. So we're looking at a consolidation that's taking place in this huge move. Those are the parameters to watch. Upside, very strong resistance between 12,750 and 12,900. I'll be back tomorrow.